The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Hope everyone had a wonderful New Year's weekend, a long weekend. And let's see what this first week has in store for us. I suspect that we've got a choppy week. And I'm suspecting also that there's a chance that we make slightly higher highs and slightly higher lows. But it's an important session here. And one of the things I'll just start off with right away is within the context of Bondi, Crudy, Dolly, Goldie, Vixie, those are the five icons that we look at. Bonds, the relationship that we've had normally, that is over decades, changed this past year. And I kept mentioning, try to think of them separately, almost as if it's the same in the market. You have to think of your stocks that you have separately to the market because they can be going in a different direction to the market. That's number one. Number two is the relationship of bonds. When yields are pulling back, it often helps the market. Or when crude oil, dollar comes up, crude oil used to pull back. The volatility index declining means that there's a huge rally in the market. We're seeing very big changes. Gold goes up when dollar goes down. All of that got mixed up this past year. We're going to see this first week, I think, is going to give us the tell to see whether that is going to continue or whether there's going to be some kind of change there. We will have the icons going in the traditional way. Maybe the dollar's pullback, the rally that we're seeing in the dollar hasn't yet affected gold. We'll see if a little later on in the week it does. Okay, here we go. I had a question. I'll do this now because I might forget it. Natural gas. You remember I had a call about a week ago from Brent, and we were looking at NG, which is natural gas continuous contract, and I said he had a particular target down in the, I think it was in the 12s, and I said, yeah, between 13.20 on the continuous contract for UNG, but I'm going to go to the crude oil, the actual continuous contract, and that has a 1-to-1 to about the 13.20 level right here, 13. Oh, where did that go? Right there. I'm mixing apples and oranges. This is the continuous contract, which has 4.09, and today's low so far is 3.993. The UNG, and a lot of people asked me this over the weekend, even this morning, what do I think? And right here, you've just extended by a little bit the one-to-one relationship. It's almost bar symmetry. It has moved a little bit to the right. That is peak C, trough C there, and this is leg C, D to the downside. But remember, I spoke about this, and I said 11.69 was the low of October. Let me just double check because it gets smoothed out. 69 was the low in December, the week of the 27th of 2021, just over a year ago. And if you do a left side, right side price time match, that's bar symmetry to the low that was made the week of the 1st of July of this past year of 18.28, you will come out to this week for a test of that low. We're really close to it. That doesn't mean to say that that's where it's going to stop, but at least it gives you a visual icon that says, haha, if we get down from anywhere from here to that 1169 area, that's going to be very important because that's where there should be, the technical should start to improve. Well, the stochastic is now down at a lower, the green line is at a lower level. That's the 9-period differential, but that's the 9-period exponential moving average, but you're not getting the 26-period, the 14-period moving average. Why am I doing this? It's the 3 and the 12, and we've got the green line lower, but the red line is a little bit higher. It's at 10.36. I'm just suggesting that for natural gas to really have a very sharp move to the upside, I don't mean just a bounce. I mean a turnaround that you can say, ooh, this is more than just a near term. It's more like a short term turnaround. And then the short term, when I say short term, I mean a week and a half, maybe 2 weeks, maybe 8 sessions, 10 sessions. But if it goes above that in terms of price, and that would be above the pink 9-period moving average of 15.31. Wow, that's a big move. That's going to be very important. It's more time that I'd be looking at than price initially, because this is exactly the moment that it should be turning. This is the week. So we're going to be watching this. All right, I wanted to get that out of the way. Now let's run the numbers. I'll do the Dow and say the Dow's down 41. Most importantly, and this is what I showed subscribers to my opening call over in my video over the weekend. I do a video and at least 45 minutes to an hour long. Lately it's been an hour long because there's been so much to discuss. These internal residual lows and internal lows are also matched by internal highs and residual highs. I haven't made a big deal about that because it's kind of the vernacular that I always talk about, but the lows is something a little different. So we did have an internal high around about in mid-November. I'll give you the exact price. It was at the 30th of November at 34,595, and that was on the 1st of December. Then it pulled back sharply, and then it had one big spike. Maybe it was Fed Day or something, a big spike on the 13th, and it went to 34,712. Pullback. So that was an internal high and a residual high. And the residual, like an earthquake, the earthquake can have an aftershock, and that aftershock can be less, it could be more, it could be the same as the earthquake. You never know. In this case, the price went to a higher high. Now the question is, on every one of these rectangles where I talk about the dark news cloud cover, and the dark news cloud cover essentially says, my eye and my ear are suggesting that from the news media, it's at about this particular point that the same news the previous day or the previous week all of a sudden has a different effect. It starts to affect the market in greater detail. So we've had that initial thrust to the downside. Now the big question is, right here, we went above the Chapman wave. There's a falling axe formation, lower highs and much lower lows, and it has a big rally. It's gone above the trend line. It tested the trend line for out of 4 sessions, 3 sessions, it hit it, and now it's holding quite nicely. But the day is young, the week is young, the year is very young. So what we're looking at is, are we seeing this yet another internal low and a residual low right here, and that we're going to plummet as all the other dark news cloud cover highs have done, plummet down to either a lower low or at least get into the 30,000s, below the 31,000. And that, for me, is the very big question. Well, having gone through a lot of Dow stocks, having gone through a lot of stocks over the weekend, my conclusion is that on a very short-term basis, we still want to have trading positions, which we've got. We've tried to get into a position that would have been a trading position in the semiconductor area. That didn't work. It was a real quick in and out, a fairly small loss considering it's a highly leveraged instrument. But we are waiting, and 1020 is still to come, and I'm not sure yet whether we've got a position. Yes, I think we might have got, where this is more a looking out at the economy type position. We'll see if we get that. So it's very select. I'll be back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
So just in terms of the Chapman wave, to refresh, in the Chapman wave, we're always looking for the lowest low bar to start the count. And in that count, we want to see at least 4 higher peaks. Peak D, peak A is the first, peak B is the second, peak C is the third, peak D is the third. You can go all the way to E, F, and G, but D is where other things can happen. Here's your first D. That was at midnight, I believe it was. Wait a minute. Well, that was at 6:10 on the 2nd. Oh, that's right. Last night, popped up and then failed. Then had a good rally, went to peak A, B, C, D, actually went to a little E, pulls back, and then continues. The green line follows the green line, goes to the next D, which is just a little bit above that first one, pulls back, and then goes to a very quick A, peak A, B, C, D, pulls back, and then has that big spike at, what was that? Was that 10 o'clock news? Just before 10 o'clock to the peak E, at just over 3,900, and then pulls back, and now it's this big candle right here. I didn't do that. I usually try to do left side, right side price time match to the other side. I didn't do that. That's price symmetry. Well, this low right here of 3842.75 that was made at 8:30 last night. We're about to take it. We've just taken it out. All right, so that's important. So in terms of raising cash, yes, raise a lot of cash. Want to put that cash back to work. So far, I'm still looking at mostly on the long side in terms of that cash. I might change that. There's no reason why to exclude the shorts, but at this particular point, I think that a chunk of the selling, it's done for just this particular phase, and there should start to be some buying coming in. That's my thinking. The other aspect that I'm looking at is it's so selective. For instance, there are some stocks that, as I showed subscribers, let me just finish this up. So the yellow chart here, the yellow background chart, basically says that if we take out in the H pattern, if we close decisively under the low of the 22nd of December in the Dow, which is at 32,573, let's say we go to 32,000, another 700 points down, 32,300. That's this week. You have the whole week in which to do that. That just suggests, hey, don't exclude the fact that even though we've had so many of these rallies with lower highs and lower lows, and then all of a sudden in the Dow, not necessarily the other indices, you've got higher highs, that's just on a daily basis, and so far higher lows, that's the change of the trend. Other things are telling me that there's a really good chance that we're starting to see an infrastructure in the technical charts that is saying that if we're able to see this little rectangle, I don't like rectangles, it's taking too long to do. It means that you've got to probably retest, in this case, 32,700, the 200 period exponential moving average, unless later on in the day there's a nice rally and you close over certainly the pink 9-period moving average, but this black one in the daily chart right there, which is 32,227. Wow, that's another 220 points to really close above it. From here, that's a big ask. And also that weekly chart, when it stalls like this, especially with an inverted Chapman wave Roman candle, and you can't get above 34,000 this week, within 2 weeks, this is already the third week. Yeah, this says, be careful. Not everything is in sync. And that's the reason why I haven't gone very strongly to the buy side. I'm rather using indexes, just as a smaller position with an index, and keep holding the cash position. All right, enough with that. So this is the daily, this is the weekly. You see we went over the inside track repellent zone. It became a propellant zone, and so far it still is. I got to extend that a little bit so you can see it better. It still is, but it's not great. All right, next thing is if you look at the same thing in the S&P with that weekly chart, we're way under. We're way under, and it keeps getting repelled at the 9 and 14 period moving averages in the weekly chart, even in the daily chart. So it was a really nice start. This is technically, let me get rid of this because it's making it a little messy. All right, let me put it over there. We're looking at peak A, peak leg B. We're in a gray leg B in the S&P daily, had a gray A. Now it's a gray B. Gray meaning that the technicals haven't given you any sign of a signal that says buy signal and then an upgrade to a buy mode. Not yet, anyway. And look at the weekly chart, still underneath the 9-period moving average in the 9-14 crossover. And MACD is it's still positive, but it's starting to weaken. Stochastic's not too bad at 58. It's not good, but it's not bad. And the on-balance volume is just terrible. There's just no real buying. But we did have the weakest part of the year in terms of volume. Certainly, the opportunity was there over the last week to have low volume. S&P monthly chart, peak B at 48.1862, plummets down to 34.91, trading right now at 38.23, underneath the 9 and 14 period moving average. Let's just do this QQQ as the beginning of the year. Let's just be as thorough as possible. Leg peak A, leg B. The leg means just a leg because you have to make a peak by having a lower high the next bar. I call these gray. Let me just change it to gray so that we're talking correctly in the Chapman wave methodology. Okay, gray means that I have not got a buy signal, and if I get a buy signal, if it gets upgraded to buy mode, it means you should go to a D. Yes, if we close anywhere in the 269 to 270 area today, I would have said, now you can see the histogram. Even now it's improving. The histogram of the MACD is improving. The stochastic's trying to come off the single digits to 12%. On-balance volume is terrible. But the monthly chart is actually technically much stronger than it was. It did go to a peak D, the fourth highest peak, right on the trend line resistance in the Chapman wave inside track, repellent zone. That was a pretty sharp. I said usually you get a pullback. It doesn't have to be deep. This was pretty deep when you think about it, from the 296 area to where we are at 264. And look at the monthly chart, just no closes above the pink 9-period moving average since back in, wow, can't believe it. Since that closed right there on in March of 2022 at 271.83, the high was at 408.71. Did I say 2? I think I meant 3. At 371.83. So this is very weak action, and unless you're going to get your soldiers moving with the troops have to move with the leader, which is the Dow, and it's not happening. And here's the IWM. So the IWM 175 closes under 169 this week. That is really poor action, but managed to somehow to struggle by Thursday back to the high of 177.32 or higher. That'll be nice. That'll be a leg B. Well, we'll see what it is. In the meantime, I wanted to show you something else. It was, I just wanted to go to the TLT right now to show you something very interesting. Look, the TLT, look at this move. You go from the 99 area to 102.34. Look at the inverse of T and X.X. Look at this. That has gone to a leg D. And it's pulled in areas above all the previous resistances. So this just says to me, there's a chance that the yields are trying to have some kind of an upside. The yields are having a downside move after this peak D.
If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, JDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. So, let me just check. Yes. So what I was looking at just a moment ago is the yields. If you're looking at the TBT, that's the way you look at yields. Look, the TBT is the ultra short limit 20-year T-bond ETF. It went from a trough right here on December the 7th at 2707, goes to peak A, peak B, peak C, peak D, leg D on Friday, peak D today, because I don't see today turning around and going above the 3264 high, and now it's starting to pull back. So if you're looking at the yields, this is a good sign saying, I didn't draw this before. I wanted to do it and I forgot. So if you're looking at this, you can see we're kind of in a potential, yes, there's a V-shaped pattern, but I think we're more like let me just draw this here, more like an arch formation that could turn into an H going to a lowercase m pattern. And that's really what I'm looking at here. So I think yields are pulling back. They're going to be stuck in a range slightly within a context of the TBT. And if I want to go TNX, I'd have to give you the number. But the TBT, let's just say the high of 32.64. Let's call it 32.90s. And right in that doji candle, let's go just below it, and 29.80. I think we kind of stuck here for just a little while. That should be helping the HGX, which is the Philadelphia Housing Index, made a peak D. It's pulling back from that. Made a peak D in the daily chart right there on the left. I can put a down arrow because it pulled back under the 14 period and the 9, and it turned pink. And it's a leg D, peak D, sorry, in the weekly chart right there. There's only a plus sign I put above it just to say be careful. That's not a down arrow yet. And it's a leg B, I believe, yep, leg B in the monthly chart. So what we are looking at here is that within the context of the Philadelphia housing sector index, holding pretty well when you think about it. I drew this rectangle in to say I think it's trapped in this range. And certainly it is trapped in, oh, look at this beautiful left side, right side price time match. Look at that, bar symmetry. From this low right here on that particular candle that I chose, it went with the Chapman wave inside wedge target resistance line right to exactly the day that we had as the left side, right side price time match. Number one, it's gone to pull back a D. It's holding the 200 period moving average. It's kind of stuck. I'm kind of impressed that housing, with everything that's going on, is actually holding quite well here at the moment. To me, that's a positive. So as I went through everything over the weekend, I said, I've got mixed signals. I've got some areas that actually should be much weaker that are holding well. I've got some areas that are just horrible. Let's just look at Shopify. We don't own it right now, but Shopify is pulling back from the day's high. It hit 36.48. It's down 34.78. Down. Oh, it's up 8 cents. Just trying desperately to get off the ground in the rectangle formation. And DocuSign was another one that was mentioned. Docu, look at this. All of them horrible. I mean, 314.75 back in August of 2021 has a little bit of a tumble down to the 40 level, actually 39, trading now at 56. A really wonderful percentage gain from the low. But wow, not when you think of what it was at. So new buyers have seen something completely different. So I'm looking at this, and everything about it says this is a period. I'm watching this week to see if we finally got some action, and you'll know whether you've got the action because ARC Innovation ETF tried to rally strongly this morning, went to 32.15. It's now at the low of the day of 30.45, and it's in a leg F to the downside. It could be a trough F in the weekly chart. It's in a leg D in the monthly chart. All I can say is that when this finally gets some traction to the upside, that is holding power. It's not a one-day event like this year or a couple of days going from the 9th of November at 32.59 up to the 41 area. Fabulous percentage. But when it's holding it on a weekly basis and for 3 or 4 weeks, you see, not like this, where you've got rising bars, but you also make lower lows. I want to see it rallying like that. That's a pretty decent move from the 34 area to the 54. That's 20 points. I mean, let's face it, that is a gain. But she keeps choosing the wrong things all the time and then talks about a 5-year plan. Wow. All I can say is that any fund or hedge fund manager that I've been in contact with over many decades who presents or even comes close to this kind of a, is this called a record with a lowercase r, it just should not be there. I don't care. You can't talk about a 5-year plan if you take an 85-90% decline for your people, because what, 125 was the high in November. You got a 5-year plan and you've already used up 1.5 years. That's from, 1.25 years. And wow, I mean, that's It's easy to say 5-year plan. I mean, I understand what she's doing. I don't disagree with her thinking at all. I disagree with her actions, but I'm watching it as independent. Like I talk about the independence of the Bondi, Crudy, Dolly, Goldie, Vixie icons. So I'm looking at this as an independent thing. But if this really starts to rally at some point, I can see that the Dow 30 starts to slow down and these guys start taking over. And then I think you get the IWM. So this is going to be an important week, but it's an important month. All right, let's get back to our story. I had a couple of questions. I'd better go back here. Hum is Humana. Oh, of course it's Humana. And I used to have this all notated because Humana is an incredible company. Just long term, they're always making higher highs and higher lows, no matter how much. Look at this. Look at the green 9-period moving average since 2012. Let's call it about May. And let's call it right there, we're across positive. That would be May, there's a monthly chart. May 2013, the high was 83.40, the low was 73. 10-point difference, doesn't matter. Look where it went to. 3 months ago, it hit 571, but it did have, that was 1 week, pink, 9-period went negative, went back to green. Did it go back to green? No, it didn't. It went 1, 2, 3, 4. 4 months from June of 2019 to September. 3 months, 4 months, and then went green again. Even with this horrible 2020 pullback to the March low of 208, it didn't even change color. It was green. That's a spectacular move. All right. So as I'm saying, there's selectivity, and that's what I was saying to subscribers over the weekend. If you look at the PPA, which is this is the Invesco Aerospace and Defense portfolio, done fabulously. Now just in a holding pattern sideways. If you look at the PPH, now this is a little different. This is the Van Eyck Pharmaceuticals. I think Humana's in that category. I think so. Look how well it's done. And it's also digesting gains, but it's only at a peak B in the weekly chart. So this is, as I say, very selective. I had a couple of questions. So Humana, I'm not sure what the question is. Yep, I'm looking at it, and it's a fabulous chart on the monthly chart, but definitely the H pattern making lower lows says at 502, just be careful. 490 is the 200-period moving average. Give me a yell when we hit 400. And I want to look at it again because I think in this particular first quarter of 2023 that some of these stocks are going to have a bit of a pullback and then come back strong. Look, almost at all-time highs. Spectacular move. Remember last week I said, don't worry about it. Hold it until the first week of 2023. Don't sell it because it's only a few points off its high. I'll be back in a moment. The Dow is down 51.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So a question came in Basil, during your show, can you just show occasionally a buy or sell signal based on your methodology? Yeah, so look, this is the E-mini. That made a peak E right there. There was that sudden spike up. I'm always very dubious at either 8:30 with a news report or the opening bell. So you got your peak D twice, and it was fabulous, and it pulled back, and that was at 9:15 or so. And then all of a sudden you got a peak A and a peak B, and then it failed. It failed as the 9 crossed negative, and it came down in a shorter time period, and that said, oh, be careful. All the technicals were failing. And then it went from the high that was made at 39, that was 39.02, wasn't it? Let's see, 38.99.75. And then pull back all the way to here. But this is not a great pattern. Look, it's a bold formation that should be very strong. It did make an arch formation. This is the 1 minute E-mini, 1 minute E-mini, and it made the H pattern, took out the left side low, and then within 2 bars went above it. That is a good sign. It's trying to walk the 9-period moving average. I tend to say I want to see price and technicals moving. That's the only reason why I put the technicals here is to give me a guidance. Look at the space between the 9 and the 14 as we cross negative right here. That just, it says by the time the green is able to get back over the pink, it's going to take a lot of points. So that means at any point you can keep shorting. But once it starts to get to the crossover, you got to say, okay, now I've got to be a bit careful. You can use other techniques. But look, the 9 remained negative all the way through. Now it's green. So this is where it's already at a peak C. It's already used up a lot of energy to try to get up. This has to work. So if you use the crossover as a positive at 38.48, I would probably say a fairly tight stop, maybe a 3-point stop, and let it just run. Because this is the one that says closing over the arch formation is a positive. It's done that a few times now, but it's already moved a little bit to the right in the price time match. It has until this particular candle until 10:47 to get to my target of 38.50, 51, 52, somewhere around there. Okay, so anyway, that's what I would do at this particular point. I think we're still a little shaky. We haven't got the S&P and the Dow in sync. The Dow is down only 0.09, the S&P is down 0.32, and the Qs are down. What are the Qs down? 0.74%. Yeah, and that just says to me, be careful. I would not be doing anything right now. I'd much rather wait for a clearer signal. Hope that helps you. Well, it doesn't help you, but I hope that does something. Okay, NKE, a question about Nike. Look, Nike is holding very nice here. The question was, what's the count? So I used this right here. In 3 bars, it went to a higher high after the peak D, and that's sort of the Chapman wave instant restart. on the 1st of November. It goes to 96.46. Now, the reason why I'm also watching Nike very closely, I don't necessarily use it as a benchmark. I use other things as a benchmark, although slowly I'm beginning to think that Nike is a very nice tell in many ways. It's not fully the tell on the Dow, but it is a tell, and it's important. So it pops up to this leg E/A. And remember what I said, if the technicals are still very strong, just use a parallel count. It goes to E. If it fails at E. If it continues with a higher high count, that is an F/B. If it goes a higher count, it's a G/C. But my rule of thumb for a long time has been a G/C so many times makes either a cup formation or an arch formation to get to the D, the missing D. So don't think, oh, gee, now it's the end of the world. Yes, you do get your pullback. But if the technicals are still strong, there's a chance you can still have at least one more pop-up before it pulls back sharply. Well, it went right to the 200-period moving average for leg D on the 2nd of December at 112.71, pulls back and then spikes above it and fails, closes above it but fails basically, and within 5 successions plunges from the high that was made on the 13th of 116.45 down to the low that was made the day before earnings came out, and that was on the 20th of December, 101.68. So I would say, that's a 10% correction. And then lo and behold, look what happens. It pops up and goes to F/A. Why? Because the technicals are good, but you got to consider it that it is still within the context of a gap up. But remember what I said, if it holds, it can go steadily and make higher highs until it actually goes just under, right to the previous high. How it handles that high is going to be really important. So I've given this a G/B, thinking that this could in fact be a new buy mode. And as I'm looking at it, I see the stochastics now at 87%. The MACD is good. I'm going to put that in. I'll be proved wrong by Nike if it plummets under 111. But at this point at 118, I think it's got higher highs to come. So it's acting well. It's in leg D by a couple of pennies. It's in leg D in the weekly chart, still leg A. So this is a tell for me. It's done the left side. It's doing the left side, right side price time mesh that says that by January the week of the 27th, it should try to hit the high of the week of the 3rd of June, 123.58. So far it's acting really well. Day is young. We'll see what happens. Now we'll see. Did we get to a leg D in the time frame that I said? Yep, there it is. Look, I had drawn in. You'd seen this before. Those of you who are watching me in the den, I had drawn the Chapman wave inside wedge target resistance line. I had drawn in the left side, right side price time match. That's bar symmetry, but I had to choose not the low. I decided it would take maybe a shorter period of time, and it could be this high right here, the bar of 1030. And it said it should go to a D, and the D was in the 38.50 area, I think it was. All right, so it's just gone to a D, and now it's a peak D, and that was right there. And look, it's still walking the 9-period exponential moving average. This is now helping the weekly chart, which is weekly chart. This is helping the 2-minute chart, which is now in leg B. So yeah, this is actually starting to act much better. I think that today we're going to close a lot better than looked like earlier on. That's number one. And number two is there has to be buying pressure for these first 2 days. I don't care how much. I am interested that the selling pressure just dissipates and that there's over the period of the next 18 trading hours, that's today, tomorrow, and going into Thursday, I want to see a base being formed because the buyers are now starting to look for bargains. Okay, so the next question came in. Yes, Meta, which I have a tough time even saying, Meta, which is, that's Met. Oh, this is the 1-minute chart. Sometimes I do that. Look, that's fantastic, but then it turns out to only be a 1-minute chart and not a daily chart. Let's go here. Where we've got daily, weekly, monthly. So Meta's trading. It's gone to a leg C to the upside. Now, this is very important. I had considered this morning, and I said, I think that Meta can start to fill the gap a little bit more. It's already started to fill the gap. And what's the gap? The low of the gap. This is the day of So that's the day of the 24th of October, has a low of 124.57. But then what happens is it pops up for 2 sessions, goes a little higher to 138.35, has a red candle, and then it just gaps down huge. So this gap right here of 128.53, I think there's a chance that in the next week we just attempt to get to the 126, 127.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
I just remembered that on Thursday I had a question and I completely overlooked it by one of our dinners, and I thought I'd written it down and I don't see it. Sorry, I'll try to find it. So the question is, when would I be considering buying Apple? And I have to tell you that it is a consideration. I don't want to do it just yet because my target has been the 118 to 116, the 116.21 low back in early 2021, because my thinking here is that the old guard has still to complete its big consolidation. But in the meantime, it's the new guard that we're looking at. Well, I don't know if you can call them a guard, but the ones that are already being decimated, they're the ones that are going to show that there's some residual strength. So yes, it's in leg F in the daily chart. It's gone under the 29.04 during the week, June the 9th, a low of 129, showing at 125 right now. I need another couple of days, but it might not even get there in this move. It might have a bounce first. So in the bigger context, I don't yet feel I might in 2 days, but right now I don't feel that I want to be buying Apple. I would also call it just a starter position in Apple, because I think Apple's still, there are a lot of things going on, and that includes the semiconductors, because semiconductors today tried to rally, couldn't rally, and that's going to be another tool that I need to see in the arsenal. TSLA, remember, I, as far as I'm concerned, having lost the momentum, having run 2 companies and then getting a third that's going to take up a huge amount of time, I just think Tesla is not in play. But there are other factors that are going on as well. And one of them is that the competition is rife, but the political competition is even rifer. And I think there are a lot of people now that are going to say, I really want to buy Tesla, but I don't know if I can do it. I mean, they have their own reason. That's what I'm thinking. So within that context, what I want to see is by the end of the day, the Dow closes over 60 points higher, preferably a lot over 60 points higher, so that we form some kind of a base, at least for a balance. I don't think this is the big 5-day move that everyone's talking about, but I do see it as an opportunity for some buying, and that's at least what we're trying to do.